Warren Buffett, one of the greatest investors of all time, has long been known for his love of dividends. While his company, Berkshire Hathaway, famously doesn't pay a dividend itself, Buffett's portfolio is filled with businesses that provide steady, reliable dividend payouts. Why? Because Buffett understands the power of consistent cash flow and compounding. Dividends, in his eyes, represent a company that is profitable, stable, and shareholder-friendly. They offer the kind of predictable income stream that can be reinvested to generate even greater returns over time. Buffett's fondness for dividend-paying stocks is evident in many of Berkshire's largest holdings. Coca-Cola, for instance, has been a cornerstone of the portfolio for decades, not just for its strong brand, but for its ability to consistently raise its dividend over time. Similarly, other companies like Procter & Gamble, Apple, and Chevron make the cut because they combine business durability with robust dividend policies. Buffett values these investments for their ability to deliver returns through both capital appreciation and income, making them the ultimate wealth-building tools in his playbook. What's interesting is Buffett's nuanced take on dividends. While he loves receiving them, he doesn't believe Berkshire needs to pay them out. Instead, he prefers to reinvest Berkshire's profits to generate even higher returns. This duality highlights the strategic approach he takes. Dividends work wonders when managed correctly, but for a company with opportunities to compound capital like Berkshire, reinvestment is the priority. Buffett's philosophy on dividends is simple but powerful. Find businesses that can thrive over decades, pay consistent dividends, and have a history of increasing those payouts. For Buffett, dividends are not just income. They're a signal of a well-run, shareholder-focused business. That's why they remain a cornerstone of his investment approach. One of Buffett's most quoted lines about dividends is, "The key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage." Dividends are often a sign of this durability. They signal that a company has a consistent cash flow and a shareholder-focused management team. Buffett's portfolio includes companies like Coca-Cola, Apple, and Procter & Gamble, stalwarts that have consistently increased their dividend payouts over decades. For instance, Coca-Cola pays Berkshire over $700 million annually in dividends, a steady cash flow that Buffett uses to reinvest elsewhere. Buffett also highlighted his strategic dividend philosophy in a 2012 letter to shareholders, explaining that dividends are a powerful way to grow wealth when they're reinvested. Berkshire's holdings provide clear evidence of this strategy. For example, Apple, Berkshire's largest position, has returned billions in dividends, which Buffett reinvests in other opportunities. Over time, this dividend income compounds and amplifies Berkshire's growth. Coca-Cola is another textbook example. Buffett's $1.3 billion investment in the late 1980s now generates over 50% of its purchase price annually in dividends. In sum, Buffett's approach to dividends has been instrumental in building Berkshire Hathaway's empire. He's capitalized on the steady, predictable income that dividends provide while reinvesting them to fuel further growth. His statements and strategy show that while paying dividends may not suit Berkshire, receiving them is an essential part of its long-term wealth-building success. Warren Buffett stands as a testament to the power of patience and the long-term benefits of dividend investing. Many people aspire to create a dividend machine in just a few years, expecting to see massive results overnight. However, Buffett's journey shows that real wealth from dividends takes decades to materialize. His success with Berkshire Hathaway isn't built on quick returns, but on the compounding power of dividends reinvested over the long haul. This didn't happen overnight. It's the result of over 30 years of consistent dividend growth, proving that the real power of dividends lies in their ability to grow exponentially over time. Buffett has often stressed the importance of playing the long game in investing. He's quoted as saying, "Someone's sitting in the shade today because someone planted a tree a long time ago." Dividends work the same way. They start small, but as companies grow earnings and increase payouts, those dividends snowball into substantial income streams. This compounding effect takes years, even decades, to fully show its impact. Buffett's dividend success, patience is non-negotiable. A portfolio that yields meaningful income in retirement requires a foundation built over decades, not a few short years. Buffett Buffett's strategy has always been to invest in high-quality companies with durable competitive advantages, allowing their dividends to grow steadily. The Apple shares Berkshire purchased in the 2000s now yield billions in dividend income annually, and Coca-Cola's payouts are a testament to the power of holding strong dividend stocks for the long term. A few more of his most impressive holdings are Bank of America, that he initially invested $14 billion in originally, and that single investment is paying him over $850 million a year. Obviously, this requires a large amount of capital, but anyone can do this on a smaller scale. Chevron also pays him about $1 billion a year in dividends, and American Express is bringing in about $300 million. Buffett's holdings highlight his preference for quality over yield alone. He famously stated, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." These wonderful companies have grown their dividends over time, aligning perfectly with his long-term, compounding-focused philosophy. Warren Buffett's dividend strategy isn't just about income. It's about creating a bedrock of stability for Berkshire Hathaway's portfolio. Dividends provide predictable cash flow, which helps balance out the volatility of the stock market and allows Berkshire to reinvest in new opportunities, acquire businesses, or simply build up reserves for future endeavors. With over $5 billion in annual dividend income, Buffett has created a financial ecosystem that blends stability with growth, ensuring that Berkshire remains a powerhouse even in turbulent times. One of Buffett's greatest achievements is how he has successfully blended high-quality dividend payers with growth stocks, such as Apple. This approach ensures that while the portfolio benefits from the compounding effects of dividends, it also captures the upside of market appreciation. For example, Coca-Cola and American Express are classic dividend stalwarts that provide steady income, while Apple and Bank of America add both dividends and significant long-term growth potential. This mix allows Buffett to capitalize on different market environments, whether it's an economic boom or a downturn. What's particularly inspiring about Buffett's journey is that when he began building Berkshire Hathaway, his access to capital was significantly more limited than it is today. Early on, he relied on the modest dividends from his holdings to reinvest and grow the portfolio. Over decades, these dividends have compounded, turning small investments into massive income-generating assets. Coca-Cola, for instance. Buffett's long-term success is a reminder that dividends are not an overnight solution, but a slow and steady strategy. It highlights the immense potential of dividend growth over decades. By starting with smaller positions and reinvesting the income, Buffett has demonstrated how even limited capital can grow into a financial behemoth. He focused on businesses with reliable cash flows and the ability to grow dividends over time. American Express, which Berkshire first invested in during the 1960s, is a great example. At the time, Berkshire's stake was worth about $13 million, a modest figure compared to today's standards. Now, that investment has compounded into billions, fueled by the company's steady performance and dividend growth. What people should take away from Buffett's approach is that building a $1 million dividend machine doesn't require you to start with millions. It requires consistent investing, a long-term perspective, and reinvesting every dollar you can back into your portfolio. With time and discipline, even modest beginnings can grow into a significant income stream. The sooner you start, the longer your dividends have to work for you, compounding year after year, just like they did for Warren Buffett. Warren Buffett is a firm believer that anyone can invest and build wealth over time. He's often emphasized that successful investing doesn't require a financial degree or insider knowledge. It just takes discipline, patience, and a commitment to understanding the basics. Buffett famously said, "The best investment you can make is in yourself," urging everyday people to educate themselves about the markets and the companies they invest in. For Buffett, investing is a game of long-term thinking and value creation, not gambling or chasing quick returns. By following these principles, Buffett has shown that anyone can succeed in investing, regardless of their starting point. His advice is simple: stick to what you know. Invest in businesses with strong fundamentals and have the patience to let your investments grow over time. It's a formula accessible to everyone, proving that great investing isn't about being the smartest person in the room. It's about being the most consistent. In conclusion, the power of dividends should never be underestimated, especially when someone like Warren Buffett champions their importance so strongly. Dividends represent stability, consistent returns, and a proven strategy for building wealth over the long term. term. Buffett has not only used dividends to turn Berkshire Hathaway into an investment powerhouse, but also demonstrated that combining dividends with growth can create a resilient and profitable portfolio. His success underscores that dividends aren't just for the wealthy. They are a tool that anyone can leverage with patience and discipline. Buffett's unwavering support for dividend-paying companies highlights their ability to generate steady cash flow, reinvestment opportunities, and financial security, even in turbulent markets. If one of the greatest investors of all time relies on this strategy, it's a clear sign that dividends deserve a place in every investor's playbook. Whether you're just starting or already on your investing journey, following Buffett's lead can help you unlock the long-term potential of dividend investing. If you enjoyed the video, I would appreciate you taking a second to press the like button and leave a comment down below.